What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, and I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, you put 1 penny in that account, they're going to give you up to 12 free stocks for just trying out their brokerage app. If you're interested in that offer, there's a link down in the description box of the video. Go click on that Webull link, open up that new brokerage account today, go get that free stock, go get that free money. We have 9 days and 10 days before two critical events take place. The first critical event that will take place on December 13th is the November CPI report will be coming out, which measures inflation. The second important critical event that's going to be happening on December 14th is the Federal Reserve will be conducting its last meeting for 2022, and it's widely expected they will be increasing short-term interest rates for the 7th time in 2022. Why are those two things important to us? Well, if we're investors and we're trying to figure out how to get to our financial freedom and build wealth in order to get to that financial freedom, then these dates are important because it's going to dictate what the stock market does in December, the remainder of December, and more importantly, it's going to set it up for what it will do in 2023. Now, if the CPI report for November comes in showing that inflation is showing signs of coming down for the second straight month in a row, then that's good news, right? That's good news. It tells the Federal Reserve that them increasing short-term interest rates 6 times during 2022 to fight inflation is working. If, on the other hand, the CPI report shows that inflation has U-turned from October and is starting to go back up in November, then that also tells the Fed they need to continue tightening. They need to continue putting pressure on the economy. And the way they put pressure on the economy is by increasing short-term interest rates. So that's why, guys, that date is so critical, because either way, it affects what we do as investors. Now, if the Fed does increase short-term interest rates by 50 basis points, I don't think that is going to affect anything in the stock market. Why? Because the market already has priced in that 50 basis points. 67% of investors already have said, we know the Fed is going to increase short-term interest rates at least by 50 basis points. Now, you have about 35% of investors who believe the Fed will increase short-term interest rates by 75 basis points. If they increase it by 75 basis points, that will affect the stock market, and I think we will see a sell-off, right, on the 14th and probably throughout the end of December. Either way, we should be game planning right now for those two dates. My game plan is unchanged. My game plan since January 2022 has been pretty simple. Every single month, I'm going to dollar cost average into my favorite investments in the stock market, right? My favorite individual stocks, companies like Tesla, companies like Apple, right? Companies like Bank of America, companies like Wells Fargo. I'm going to dollar cost average into those companies every single month. I'm also going to dollar cost average into my favorite ETFs. Vanguard Information Technology VGT, Vanguard S&P 500 VOO, Vanguard Total Stock Market VTI. Those are three of my most favorite ETFs that I dollar cost average into on a monthly basis. So my goal is to do what? Gather as many paper assets as I can at a discount, knowing that, or at least my opinion is, in the next 3 to 5 years, I will make a considerable amount of net worth gain if I do that. Some of you may be asking, well, then if that's the goal, why is that everybody's goal? No, it's not. Some people have a short-term goal. I have only a long-term goal. And some people's short-term goal is, hey, while the stock market is volatile, then what I'm going to do is take my money out of the stock market and I'm going to put it in something like a U.S. Treasury bond, a 1-year U.S. Treasury bond. And right now, a 1-year U.S. Treasury bond is yielding around 4.75%. So some of your big institutional investors, when they start selling off their positions in the stock market, and you see the stock market going down, a lot of them are moving that money over to U.S. Treasuries. Why? Because they can get a guaranteed rate of return for a short period of time. I don't do that because I'm a long-term investor. I don't really care about a short-term gain of 475. What I really am trying to do is buy assets now where they're discounted. I want them to be discounted because I know if I can buy them discounted enough and I hold them long enough, my opinion is I will double, triple, quadruple my money from a return standpoint, and I will get way more than a 4.75% yield. Now, again, guys, that's my strategy. That doesn't have to be your strategy. You have to figure out whatever your strategy is. I'm not telling you my strategy is right. I'm just telling you the strategy that I use, and it has worked for me, and that's the reason I don't flee to safety and take all of my money out of the stock market and run over here and put it in a U.S. Treasury, because I'm still thinking 5, 10, 15 years down the road, that's when I'm going to need my money in order to start living on and taking care of myself in my golden years. So at that point, if I want to move my money out of the stock market and put it in U.S. Treasuries to protect it, then that's when I'll do that. I'll move it to bonds at that point. But while I'm still trying to grow my wealth and take advantage of opportunities like are happening right now in this bear market we're in, where all of these companies and all of these ETFs and all of these index funds are on sale, that's a great opportunity for me to buy great assets at a discount and then do what? Hold those great assets till they start trading at a premium again. And that's what I believe. That's the strategy that has worked for me over the last 22 years. The key, though, is what's your strategy? What are you trying to get accomplished right now as it relates to building your wealth? And do you want to use the stock market to do it? And if it's yes, then you got to ask yourself, am I short term or am I long term? Or am I a combination of both? You got to figure that out, right? All I can tell you is if you pay attention to what's happening in the economy, if you pay attention to what's happening in the stock market, in the crypto market, in the housing market, then that will give you some indication of what you can do with your money in order to leverage it, to grow it over the next 3, 5, 7 years. So that's what I try to provide you guys on this channel, is just a glimpse into my psyche as it relates to my financial life and what I'm doing. It doesn't always work out the way I want it to work out. It just doesn't. But what I do know has worked out. Anytime I buy a good paper asset, a good company or a good ETF, and I'm willing to hold it long enough, typically, not always, guys, but typically I come out ahead because I understand the stock market works in cycles. Right now, we're in a bear market cycle. We're in a volatile bear market cycle because of all the uncertainty with our economy, with high inflation, with what's going on in with the Russia-Ukraine situation, what's going on with China and their zero tolerance pandemic policy over there. All kind of stuff around the world and in the United States affects our economy, guys. And ultimately our economy, when it's good, our stock market is good. When our economy is not as good, or people perceive that our economy won't be good, the stock market typically doesn't fare well. Also, the stock market doesn't typically fare well when the Fed increases short-term interest rates. And the reason it doesn't fare well is because companies borrow money, guys. They need cheap money to borrow in order to invest in their growth. And then when they invest that money in their growth at 3% or 2%, and they can get a 8 or 10% return on that money, they can make money. But when interest rates go up too high and companies can't borrow money cheap, then they don't borrow money. Therefore, they don't invest in growth. They don't hire people. They don't expand, and they do not create more revenue. And that's when investors take their money out of those companies and move it to things like U.S. Treasuries, right? U.S. Treasury bonds. And they keep it over there in that safety and get that little 4.75 until they are clear and certain that our economy is headed up. And then they start putting their money back in the market. Again, guys, that's just my opinion. That is not etched in stone. Go out and do your own research, do your own homework, and come up with your own conclusion. But I'm just sharing with you what I believe. Drop me some comments and let me know what you think about what's going to be happening here really, really soon, right? December 13th is fast approaching. Like I said, 9 days. We're going to get that CPI report for November, and that will set the stage what happens in our stock market for the remainder of this year and into 2023. If you want those 12 free stocks from Webull, click on that link down in the description box. Go open up that new Webull account. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.